Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's January 17th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I just got home from the CES, which is a Consumer Electronics Show. It was last Thursday. Took a red eye home. Had to get home right away. Because on Friday, I had to drive 2 hours to Daytona to see my daughters compete in a state cheerleading event. Now, I've been on the road a ton. I'm actually leaving on Saturday. I'm leaving at 4 a.m. to head to Vancouver. I'll be speaking at the Vancouver Resource Investment Conference. Also taking an exclusive tour, which is a 6-hour drive going to Washington to visit a crypto company, a legit one, a very good one, that's actually seeing a lot of interest from several of the world's largest mutual funds that are investing in the early stages. This company is supposed to go public, I believe, sometime in February. Very excited about that, and I'll talk more about Vancouver in a few. When I got home from the CES, again, I was exhausted, taking the red eye. As soon as you get off, it doesn't matter with your family and everything, right? They're like, here's the list of things to do, and it's fine because, I've had the kids the whole time. But, my wife just started giving the details of the event, right, for the cheerleading event. And some of those details are pretty interesting because it's like how we, right, I'm going to stress the word we, have to wake up at 5 a.m. on Saturday morning. So we're going to drive to a hotel, basically Friday night. Just got home, right? So, wake up 5 a.m. Saturday morning to get our daughters ready or, dressed. Put these crazy bows and do their hair and stuff like that and splash tons of makeup on their face. She's using the word we. Because in reality, I'm not there to put makeups on my daughter. I'm not there to do their hair. I'm not there to help dress them in these crazy outfits that barely fit them. I'm strictly there to be the punching bag, which is fine. Because that getting your kids up at 5 a.m. to enter a huge event that's being held in a gymnasium that sits tens of thousands of people. I mean, when I walked in this thing, I thought I was going into Allen Fieldhouse. Maybe not that big, Allen Fieldhouse. Kansas Jayhawks play there, in case you're not a sports guy. And they have lights everywhere. They cut off like half of it. So think of, it's not on a basketball court, but think of like half of a basketball court being cut off. And they have all these lights and the mats and stuff like that. Think, when you see those cheerleading competitions, that's how big it was. It was like the ones you see at Disney World and stuff. So when you have all that going on, you're waking up there, nothing's going to go as planned. Now, there are like 10,000 cheerleaders at this event. So it was a weekend event. So we're talking more than 7,000 mothers, if I had to guess, over the course of this event over a few days that are high stressed to the max, very angry. I mean, you could send them into any war and they kill anyway. The anger, right, is incredible because there's so much that goes into this event. There's a million things going on and you completely stress. So, my wife's going to be yelling at me for no reason. I'm sure a lot of husbands that did go to this, they're just super stressed and that's perfectly fine. So you just kind of stay out of the way. You run to get them back breakfast. You kind of pack everything up from the hotel when you're done and you drive them to the event and just, your job is to make sure you don't say anything. Don't compliment them. Don't say anything. Just don't say anything. You're going to yell at. Don't even tell your wife she looks nice. Again, it's a disaster. And I get it. It's my wife's credit. And all the moms out there, I'm not making fun of you or picking it. I get stressed sometimes just like you in certain scenarios. But the things that moms do for their kids is incredible. The amount of work they put into some of these events, I can't use a better word than incredible. It's really stressful because they have to have everything absolutely perfect, right? Because it's not just your daughter doing one thing. If the hair is off or anything's different, remember you're going to a cheerleading competition with a whole bunch of different girls, and everything has to be perfect. And then even worse is the coaches of these cheerleading squads are 10 times meaner than the mothers at their worst times or in the most stressful moments. So if your kid is late or something off, forget it. The mothers get screamed on by these. What are you doing? I told you that you got to be a fight. It's the wrath that they unleash on the mothers is not pretty. And you see it there. You see it as you walk in. Coach is like, what is it? I can't believe you look like this. Give me that. I got to fix it. The cheerleading competition, it's just, I'm new to this. This is the first time my kids are going into something like this. So it's like, such a crazy thing. But I could tell you, if you want my best investment idea, and that's what you guys listen to this for, start your own cheerleading organization. I mean, the cost, again, I'm going on this first. The cost to go through a full season of cheerleading is like more expensive than buying season tickets to the Lakers. And your outfits are like $200. And a lot of times they're going to change the outfits. So it's going to cost you thousands of dollars throughout the season. Yet you have to pay a fortune just for the classes. Traveling to these events are a fortune. And they really don't give you details. So like, our first details of going to this event, I'm not kidding you. Our daughters were performing early in the morning. It's like 8 and 9. And they said the awards are going to be at 8 p.m. I'm like, what are we going to do? So do we have to get in a hotel room? And then they're like, no, it might be at 6 p.m. And then when we're there, they're like, no, the awards are going to be at 1 p.m. We're like, okay, thank God. So they let you know all this stuff when you're there. When the original plan, if it was 8 p.m., you kind of have to get a room, because what are you going to do with your kids? Just going to stay there all day. You like for them to relax, but they don't give you any details. So which makes you even more stressful. But you get there, and you had to pay $10 for parking. I had to pay $4 tickets to get me and my wife in. I mean, that's more than you pay to go to a minor league baseball game. You have a small bottle of water, it was like $3. Dipping dots, which if one kid gets to, every single kid in the whole entire place has to get, because they're like, oh, they got it. A small coffee was like $3.50, and they don't even give you milk, right? So, and the best part of this event is these people, they're trained to upsell you, which is incredible. I mean, it's like they just read the top marketing books on Amazon or something. I mean, I buy the ice cream for my daughters. I'm like, okay, here you go. Here's $12. And the waters, here's $20 for 2 waters and 2 tiny, dipping dot ice creams, right? And the girl's like, you want any more water? You're going to be here for a while. It goes great with ice cream. I can give you 2 for $5 if you want it. Do you want a bag of chips for your wife? I mean, I'm like, lady, leave me alone. I'm broke. Leave me alone. I'm good. But they were training you to train to upsell you, which is incredible. But hey, you walk into this place, you shake someone's hand, and you got to give them $5. They make an absolute fortune. I didn't realize it. I guess it was just so surprising to me because I really didn't know too much about these events, and my wife didn't as well. But seriously, if you want to make $1 million inside of 3 years, start like a cheerleading organization where you have these big events and stuff. The amount of money they make is incredible. But for guys out there, if you're listening to this podcast, if your kids or your wife want to get into cheerleading, let's get the kids into cheerleading. Do everything you can to say no. Go to Google. I'm sure you can find stats on how excessive cheerleading leads to shin splints or causes damage in your knees or whatever, because when all is said and done with these events, it will probably cost you less to send your kid to Harvard than pay for them to go to cheerleading competitions over 10 years. And I've even talked to several mothers there that are like, I just dropped my daughter off, and they're like 16, 17. They're in the older competitions. So they're hanging out with their friends at night, and I went to go grab a drink. And, there's a couple of mothers there talking about, you got to see how much it costs. We've been doing this for 10 years. I have no life. It just consumed your whole life. It is so crazy. Anyway, with that said, kudos to my wife, who did a ton of work. I love you. I'll gladly be a punching bag all the time. Sometimes you need me to be a punching bag. I'm there. My daughter's really, really proud. The first competition, I had no idea how big this event was. And seriously, it was a major, major, major gym at a school with 3 levels of seating. I mean, they actually had numbers for the sections like 204, 205, 206. That's how big this place was. I thought it was going to be kind of like at a gymnasium. And they killed it in front of a lot of people. So very, very proud of my girls. Very, very busy this month. But that was something I didn't expect. And like I said, when it comes to cheerleading, guys, man, just be careful. The expenses are crazy, but, I guess if your daughters really love it, it's worth it. But just be prepared. I'm trying to help you guys out. Moving on. It is conference season. Came back last week, gave you a great perspective on the Consumer Electronics Show, especially the Curzio Research Facebook page. Guys, check it out. I'm going to start posting more videos that I took. I did a lot of live videos, post a lot of pictures, but there's other videos that I took outside of that I'm going to start posting to show you at different companies. Again, that's for free. So you're going to see some really awesome videos, great pictures of me at the event. And I was in Las Vegas. Then last week, I had a special podcast for you guys where Mark Lichtenfeld came on to talk about the JP Morgan Healthcare Conference. A lot of major moves in biotech just from that conference, including one of ours that pulled back, which we're writing about now. And that's in Curzio Venture Opportunities. Great company pulling back. I think it's an amazing buying opportunity because basically, they're having a little bit of trouble getting their money, getting the payers, which is the insurance companies, right, pay for their product. I don't want to give too much away, but it's turning out to be a great buying opportunity. So they lowered estimates, stock came down. But a lot of these companies give you the updates or the report on what they expect next quarter or revenues or deals and stuff like that. But you're seeing major moves. Even Juno's getting taken over, I believe, by Celgene. That stock was up a lot today. But a lot of interesting things happen at that conference, and I want to try to give you a perspective of all these conferences because January, February, March, that's conference season. And that's where us as analysts have to do the most work, really dig into these companies because these are market-moving events. And in the middle of this, what do you have? What's going on right now? Earnings season. So it's a crazy time that you need to pay attention to. I know you may still be a little bit tired coming off the holidays, but these 3 months are make or break for you because it's going to be able to cut your losses on stocks that you really don't like or buy into ideas that were amazing that you saw that a lot of people aren't really going to be talking about because you did the boots on the ground, you were at the conference, and even at the CES, I saw, I think, 5 or 6 subscribers there, which was cool. And they're like, Frank, I can't believe it. I was like, yeah, I actually do the boots on the ground. So, yeah, I was just sure to have my headphones on and yeah, I'm visiting companies, stuff like that. It was great. I love when people say hello. And they were doing, those subscribers are actually doing their homework and their research too, trying to find new ideas. That's how you find the new ideas before they're mentioned on CNBC, before they're mentioned in Wall Street Journal, by going out there and going to these conferences and just talk to everybody, talk to the people. You don't have to have the best industry contacts. You build them up over time. Because you're going to these booths, you're talking to these companies, you get their phone number, and you just ask. They're there to answer your questions. Ask every single question you want on every single trend at the CES. The JP Morgan Healthcare Conference is cool. I'll get another update from Mark Lichtenfeld probably this week. And then we have the Vancouver Resource Investment Conference, which is going to be huge. It's being held or being run basically by my friends at Cambridge, and going to be co-produced by Katusa Research, right? Which is Marin Katusa. Going to be some of the biggest names in the mining industry at this event. Over 250 companies will be there. You talk about experts, analysts. This will be a big cryptocurrency focus, which is interesting, right? Because we're seeing cryptocurrencies come down. So now this theme, all of a sudden at mining conferences, right? Gold, silver, we hate cryptocurrencies. It's taking over the mining conferences. And they're getting, I did, this is in San Francisco when we had a conference in San Francisco in mining. And I did a presentation on cryptocurrencies and some stocks that would benefit the most. And it was the second most watched video, I think, of the whole conference. Not because of me, because it was cryptocurrencies. Everybody's interested in cryptocurrencies. So now these, these events, these mining events, because gold and silver, uranium have been, just terrible industries, right? I mean, horrible, no real catalyst over the past 5-6 years. It's just been, it's been so hard and difficult to make money in these industries that, hey, let's get some interesting stuff in here, cryptocurrencies. And it's amazing because this just shifted over the past few months. And I hope that these cryptocurrencies don't pull back a lot more because again, it's given them a bigger focus, which is great for these conferences. But you're going to see a big cryptocurrency focus at the Vancouver Resource Investment Conference. So that leads me to my interview right now with Marin Katusa, who's the founder of Katusa Research, close friend, as you know, right? He's been on this podcast numerous times. He's going to tell us where he thinks gold is going in 2018, where Bitcoin is going in 2018. Because again, he's co-producing this, and he's the one that set up a lot of crypto people, which he did last conference as well, and it turned out to be very, very good. A lot of arguments back and forth between libertarians, gold bugs, cryptocurrency, crazy fork. Bitcoin's going to 0, Bitcoin's going to 1 million. I heard both of those in the same panel, which is pretty cool. There's a little bit of a middle in between that. But a lot of great stuff. And of course, Marin, like he always does, is going to share his favorite junior mining picks with you. And you know what? Let's get to that interview right now. Marin Katusa, thanks so much for coming back on Wall Street Unplugged, bud.
Oh, it's a pleasure, buddy.
Well, I guess we should let's start with gold. I mean, it's a sector that I feel like is lost now that cryptocurrencies have taken, the center stage, and you're seeing so many people in. I don't really hear the gold conversation. The questions that I get, I don't know if you're getting as well, is more, cryptocurrencies and Bitcoin and stuff. I'm wondering if now that Bitcoin's coming down over the past few weeks, if you're seeing more interest in gold stocks and gold market. I mean, is there a correlation or any kind of relation that you're seeing with these two markets? Since a lot of these conferences we're attending are not just gold and silver anymore, but they're throwing cryptocurrencies in there.
No, definitely. You've seen, as the cryptos were going up basically from mid-2017 to basically this week, not just the retail crowd, but the institutional crowd were very interested in the crypto and the blockchain and the marijuanas, But now that cryptos have pulled back, it's not like that crowd has sold the cryptos and they're rushing to gold. I would say gold is still a very unloved sector. It's really just the diehards, and it's still bargain hunting season, in my opinion.
Well, what we saw at gold, Marin, which is kind of surprising, and actually, I got to say, I made this mistake with oil because I predicted that oil was going to go a lot higher when it was in the low 40s. I was a contrarian at the time, and what happens is, oil prices are over 60, and a lot of the stocks didn't participate. They're starting to participate now, but it was amazing that there was a disconnect where the stocks were down 15% and the price of oil was up 15% at the time. Now it's up much higher. Now you're seeing the stocks come back. I'm bringing that scenario up because we're looking at gold prices have done pretty well, actually, right? You're looking at gold prices over the year. They're up over the past 12 months. They've been doing pretty well. But if you look at the stocks, they're significantly underperforming. They're having trouble gaining traction here. Do you see that as a disconnect? Is that normal? Because you would think with gold prices going higher, that should be pretty cool for a lot of junior miners, even a lot of the producers and stuff like that. But we're not seeing that follow through.
You are 100% correct. You're not seeing the movement in the equities, so the publicly listed companies, and there's a couple of reasons. The streamers have the first mover advantage with the price, so they're the most benefiting immediately. Then you got the producers, then you got the developers, and then the last to move are the juniors that get the biggest leverage when people believe the price of gold is going higher and is there. I think there's still a lot of uncertainty and disbelief in the price of gold because so many people have been burnt on it. Plus, there's so much more action everywhere else in the market. So, again, we're not seeing the equities because there's not new capital moving into the sector, and that's the main reason.
That's good to know, though, the first mover advantage when it comes to – could you explain that a little more when it comes to streamers? Because you look at royalty companies or streaming companies where they're basically like finance companies that just have a few employees, and they'll take they'll invest in a particular project and make money as the company produces whatever, 10% of production or whatever, but they don't take on any of the risks in terms of production and all that stuff. So could why would they be, just for people who are not familiar with the industry, why would they be a first mover advantage?
For sure, because it's a financial stream. So, for example, if you have a gold mine, and whether it's Franco-Nevada, Wheaton Precious Metals, a Cisco, Sandstorm, there's a lot of private players coming into the royalty player too, like sovereign wealth funds and other funds. But anyways, what happens is if they get 5% of the gold from a mine or a predetermined number of 50,000 ounces or whatever the stream is set up as, they get that as either a fixed price, so they're paying $400 per ounce in the gold per ounce, and then they can sell it at whatever the price of gold. So as gold goes up, they get a direct benefit. So they're the first. Whereas the miners, generally speaking, why they don't get the bump until more money comes in is if gold's going up, that generally means that usually the cost of production goes up in parallel, while their tires go up because more people are starting to produce, or the price of oil, which is a big component, and labor. Labor is the biggest cost out of mine. So the ones who have the first impact are the streamers. And remember, we have to differentiate between what type of royalty or streamers there are the guys who have producing streams, or are they on development assets. So the streamers had to figure out a way to put up the capital for the company, either during development or buying a stream after the project goes into production. So that's essentially the main reason why streamers get the first benefit, and where the streaming companies are doing quite well in this market.
No, thanks for that explanation, too. That's cool, because a lot of people are familiar, just curious about that first mover advantage. Now, Marin, you have taught me a ton when it comes to investing in this industry, right? Especially over the past at least like 7 years or so. You have outperformed the markets, and it hasn't been easy because you've had losers as well as everybody else had losers. But most people who invest in this sector have gotten the head handed to them because it's been such a terrible market for such a long time. Could you explain how you invest for your clients, for your people, in terms of putting deals together when it comes to investing in private placements and warrants, to the point where you know how to limit your risk, but yet you're going to maximize those returns, which has worked great for you considering it's been such a horrible market in what we're looking at 5-6 years?
Correct. So there's a few rules of thumb. First of all, never put all your eggs into one basket. It works great if your big bet plays out, but there's so many uncertainties. So, the other rule of thumb is this game, the resource is so cyclical, and anything that happen at a project will most likely happen. So there's so many factors. So risk mitigation is absolute critical. Why I prefer a warrant structure, especially with listed warrants, which I've come to be known for in the market, and I do the majority. I do more warrants than most firms. I do more financings myself than most institutional firms, brokerage houses in the industry. And it really is this way, Frank. Like, if I'm going to put up a lot of capital, and I've got this fundamental belief with management, and I know a lot of the big players, and, they're like, oh, Marin, we hate warrants. Okay, well, I can't reprice my cost of stock. Management can reprice their options. Let me explain to your audience what an option is. It's a incentive option for the management that the exchange or the rules allow, where, a president of a company can get up to 10%, well, all the management team, not just the president, but the whole management team can get up to 10% of the shares outstanding in options, which is like a soft comp. There's no actual cost base that they pay for that up front other than the exercise price of the option. So pretend your stock's at $1, and there's 100 million shares out, the management can issue, with a rolling system, up to 10% of the shares outstanding at the price of the market. So let's hypothetically, to make this a simple exercise, they can have 10 million options, and the life of those options 5 years. So I sit with the management team going, okay, so you need my money, and a lot of these times is I become, a sounding board for the management teams because I've been to so many other projects and I've got a good take on the markets and capital. And, they get a salary. I don't get paid. I take no fees. You can't buy my research. You can't buy advertising for me. There's nothing like that. So I got to put up all the capital risk, and I got to believe in the execution of the management team, but they get paid a salary, plus they get options. So to make our interest aligned, I want warrants. And when management teams say, oh, Marin, we don't like your 5-year warrants, I respond with, great, I don't like your 5-year options. So if you're willing to take a 3-year option, I'll take a 3-year warrant. And generally we find that management teams don't want to cut back their options, so why should I cut back my warrants? So it's about risk mitigation, okay? So now there's other guys in the industry who hate warrants like Ross Beaty and Lucas Lundin, but these guys put up hundreds of millions of dollars in their own deal. So when I look at someone like Ross or Lucas who I can't get a warrant from, it's because they're not giving themselves that type of benefit where, Ross Beaty put up $150 million in Altera. So that's why I put up tens of millions of dollars, and it was a good score for all of us. And there's no secret, I was a major sounding board, and I had my own theory and calculations on what Altera should have done, and it worked out great for everyone. Same thing with guys like Lucas Lundin. These guys are winners, and they invest so heavily in their own company. They're not in it for the option. These guys own at least 35, a third of the shares outstanding at the cost base. So it's all about aligning your interests with the management team. And look, Frank, I've had some big wins, and I've also lost on a lot of stocks too. And that's where you get a basket of stocks. And I've always say to all my subscribers before they sign up, if you have a basket of currencies for companies, say you got 10 stocks, we're going to lose money on 3 or 4. We're going to break even on 2 or 3. And it's those 2 or 3 that, really go, the Northern Dynasties, last year I took you to the airline, Boeing's 2 facilities. It was kind of fun checking that out. Well, my followers made 6-7 times money on that. It was a quiet little story that nobody knew about, the Altera. And I think there's stories that, you learn from. Asanko was one that I lost millions in. And you know what? The management team are solid. And guess what? They just got the geology wrong. There was no fraud involved. There was no scam involved. This is a high-risk game. And even when these things go into production, they necessarily don't always work out. And that's an example of a stock that didn't quite do as well. And, with the bit different a market, it would have probably got bought out a couple of years ago if the price of gold was a bit different. So, certain projects need a certain price, and then you got that window for the market. There's so many factors here. So if you can mitigate your risk as much as possible, there's no way to eliminate risk, but it's about mitigating risk. And that's kind of my fundamental thesis, and it's going after world-class assets with world-class management teams. And, you saw a couple of the deals that I've been involved in where you find a world-class asset, and you might have to chop up the board and bring in new characters and move things forward. But, it's a tough game, and stick with the winners.
We're going to be talking to Marin Katusa, who is the founder of Katusa Research. Marin, you brought up a great point, which I want to get to, because I love this podcast, and you're trying to teach people what we know. And it's not like we're geniuses. It's just we made a lot of the mistakes, and we want to try to guide investors not to make the same mistakes we have. And, of course, like you said, we're not always going to get it right, but we want to try to limit the damage when we do get it wrong, and have those gains continue to run. But how important is it? Because you did mention a couple of things when we went to the Boeing plant, which was amazing, biggest factory in the world. We went to go see Altera's assets, right? And this is a company that you've been high on for a long time on this podcast. And I think the last time you came on this podcast, you actually recommended it, and 2 weeks later was when the takeover announcement happened. And then Northern Dynasty, we were kind of first to the party going there when this stock was below 40 cents. It's still doing well today, too. It's well over 3. How important is that boots on the ground? Because we're going to get to the Vancouver conference, which I know that I believe you're co-producing or co-hosting, and that's on Sunday and Monday. And usually when we go to these events, we do have a trip planned as well. But how important is that boots on the ground? Because that's where it seems like, even for me, is you're getting the best ideas, and I want to really pound that in investors' heads and our listeners' heads too.
It is absolutely critical. I've got 9 guys in my office, and at every week, someone's on a site visit somewhere. I just got back from one last week. Frank, so much of our industry, I want to go back to differentiating why I do what I do and why I'm so close with you and admire you and appreciate our friendship. You can't buy Frank Curzio's stock recommendation. You can't buy we're not bought for, guys. So this newsletter writer world, it used to be newsletter writers had this dark, shady cloud that if you couldn't be a real analyst or get a job at a real firm, you became a newsletter writer. I believe the tables have really churned, but there's 2 types that you have to ask. Number one, is this newsletter writer like some bot guy who gets an annual promotion price? You got to look at the details. Or is this guy putting up serious dough of his own money and going on this visit? And you have to figure out what type of newsletter writer am I following. So that's step 1. Step 2 is you cannot be a desktop analyst. And so many people in our industry, think they're a talking head, where they're just a moron, and they really don't know what even a mine looks like, or an oil field, or a geothermal facility, or whatever you want to go through. You have to get out to site, and that's how you find out. For example, little things like, remember when I took up that whole bus up to the Copper Mountain mine? How clean is the project? Are things organized, or is it a shit show? Little factors of, you go and talk to the drillers on site, and you see if they're grumpy and pissed off about how things are going, and you're going to get so much insight from the guys on site. I always go and have a beer afterwards. I tease them, call them the roughnecks, or the truck drivers. They know what's going on day to day, month in month. That's the presidents of the companies are going to put everything into the absolute best light. But, you get a couple of beers into a roughneck, they're going to tell you exactly what they're thinking. And that's the advantage of going out to the site and seeing what's going on. And you meet interesting guys, and you'll hear about other projects that they just came back from, or they worked on and they had this different insight. And then when you go to that project, you got, you're not going to find that stuff out in the financial spreadsheets. And look, the financial side is absolutely critical. The desktop part is key, but it's not the only key to the keys of success. It's one of the keys. And having that Rolodex and that site visit and being able to meet the guys on the ground, and when you sit with 4 hours driving to the site, you get to flush out the bullshit pretty quickly.
I want to stress too what you said was important, where the fundamentals, you have to look at the numbers and everything, and that's important what we do. But guys, remember, the numbers are there for everybody, right? You have forensic accountants. I mean, people are able to read those numbers better than others, but that's there for everybody. What's not there for everybody, like you said, Marin, is, well, I just came back from the Consumer Electronics Show for 5 days, and going to these companies and seeing the crowd around their booth and how excited they are, and talking to the employees. I mean, you're getting details you can't get anyplace else, and that's real-time data. When in my world, companies report every 3 months, you're seeing stuff that's happening now. It's going to be reflected in what they're going to say, on their next quarterly conference call. So, being there is so important, and it's a good segue into this Vancouver Resource Investment Conference, right? So it's going to be the 21st and 22nd. Why don't you talk a little bit about it? It's something I love to attend. You're grateful enough to let me speak a lot at these events, and we always set up great meetings, and we always go on visits and site visits and stuff when I'm in Vancouver. Talk about how important this event is to you.
For sure. This event, this is kind of the family that started this were the Martins, and Joe Martin started the show with Cambridge House back in, 30 years ago. Jay Martin took over for his father. The business was really struggling, and it was a reflection of where the resource sector was. 2014, 2015 were really tough years, and the companies didn't have much capital left. And I had a meeting with the Martins, both Jay and Joe, and it was looking pretty tough. The company was doing everything it could to keep the show alive for its audience, but they were taking on some big debts to keep the show alive. And I came up with an idea that, we mutually all agreed on was the best path forward. So we became partners in 2 of the shows, the San Fran show and the Vancouver show. And the Vancouver show is the world's largest junior resource and, speculative public company conference. We're going to have over 8,000 people at the show for Sunday and Monday coming up. And the difference, I guess, when we're co-producing it is Jay and I go through every single person who speaks. There's no paid promoters. There's no bullshit up there. And the general rule we have is, if I'm not willing to sit and listen to this guy talk, nor am I going to make you do it. And, I ruffled a lot of feathers in the industry, and a lot of other shows have popped up because I won't give them speaking time at my show. And that's cool. For all the audience, go to the B division, go to the farm team shows. This is prime time. This is the NFL show, and there's always room for, the Arena League football if that's what you want to go to. But this is the Super Bowl, and we're starting off the show with a bang. My style. I don't hold back, and these are my old partner Rick Rule and a mentor and good friend, and we're starting the show is who's the best in the business, me, Rick, or Frank Holmes. And they were taken aback by it. I said, but look, guys, let's each pick 3 stocks, and let's see who the best is. And we're doing a Pikachucha style where it's 20 slides, 20 seconds each slide, and we're picking the companies under Marin's team. I picked my 3 companies. Rick picked his 3 companies, and Frank Holmes picked his 3 companies. And we're going to let the audience decide who the best is, and then we're going to find out in a year who really is the best, because it all comes down to how did those companies perform. So right out of the bat, in the first hour, you're going to get 9 stocks that Rick, myself, and Frank Holmes think are the 9 best stocks in the industry. That's how we're starting the show. Then we got you up there. We got a wicked debate with Tika Tawari and Jim Rickards and Peter Schiff. And if you don't know Peter Schiff, he's exciting, and I'm the moderator. And luckily, I'm bigger and stronger than him, because Peter loves the sound of his own voice, and he forgets that there's other people on the podium, and I'm going to have to remind him of that. So it's going to be a challenge to let the other people speak when Peter's there, but that's going to be a fun event. You've just got the best guys in the industry, whether it's Ross Beaty and Lucas Lundeen and just everybody's there, and it's our network of guys that we work with, and they're all there in one room. And Frank, here's the best part. You can go online and listen to these guys talk, or you can come to the show, and Rick's hanging out with me there at a booth as we're talking, and you can come up and say hi to Rick and ask him a question. You could email him, but he probably gets 1,000 emails a day. You're lucky to get a response. It's the closest thing to a retail or institutional person to becoming an insider in the industry is by coming to these shows. And you've seen it yourself, how many ideas pop up on the show floor where you go to a spontaneous dinner and you're like, yeah, I'll put some money into it, and it works out as a great investment. We've been there. We've seen it happen.
No, that's great stuff. And from someone who's been attending these conferences, guys, I tell everyone to attend these things because you do get the opportunity where I attend conferences all the time, sometimes around the world. And especially when you go like the Irish Zone or the Value Investing Congress, which has the biggest hedge fund managers, those guys speak and they sneak out backstage. They might do a CNBC interview and they're gone. You'll never, ever talk to those guys. At these conferences, Rick rules at his booth. You'll see 30 people around. He's answering questions. I mean, it's crazy. I think it's not because Rick rule's been around for 40 years.
Rick's amazing. I call him the James Brown of the resource industry. The guy's a workaholic. He doesn't need the money. He does this because it's truly what he loves. If there was no money, let's just say the money he made from this was an annual teacher's salary, he would still do it because he truly loves it. And he's going to be there. It's funny. We have a little history where he shows up, and I know when he shows up, and I always have to be 5 minutes before him. I bring him his coffee out of respect, and he's there till the bitter end, and we go grab a dinner at the end of the show. It's interesting. The difference between a guy like Rick Rule and an employee, even within his own firm, Rick's there from morning when the show opens all the way till it closes. First in, last out, Philo. Whereas he recognizes that, his employees will go for a lunch and they'll drift around. Rick doesn't take a lunch. The guy's a machine. Same thing with Frank Holmes. Same thing with Ross Beaty, Lucas Lundin. You see a pattern to these, these champions, these titans in the industry, and they're there for you because this is what they love. So what you got to do is show up and talk. For those who physically can't because they got jobs or families or whatever, what I've actually done is I've invested in, we're filming every single talk and every single debate in every single room. Now we've taken the maximum square footage of the biggest convention center in Vancouver, and it's still going to be jam-packed. So this is a huge success show, and I recognize that even my own subscribers, like there's so many of them can't come to my show. And by the way, we're not charging you $1,000 to come to this. Just go online and it's free, right? If you show up at the door, there's probably, I don't even know what it costs. I think it's like $25 or something. But then you got to wait in line and do that. Streamline it. Print off your thing and don't wait in line. Be smart. Come prepared. Anyways, for those who can't come, everything's going to be videotaped and recorded, and we're going to put it on our website. So, it's going to be a lot of fun. And I'm doing it. Look, I've got a family. I'm not spending all day Sunday away from my family because it's a job. I'm also doing it because I love it, and I'm looking for the next big score.
And let's get two quick more questions. So the next big score, what are some of the things that you're looking forward to? Because I know these conferences have taken more of a cryptocurrency focus over the past 6 months. It's going to be a very interesting topic because now since it was San Francisco when I was on the panel with those guys, and let me tell you guys, with Schiff and Tiktawari, I mean, that you're going to have to referee, man. I mean, there may be fists flying in that. That's going to be interesting. but it is going to be pretty crazy and Rickards. But when Bitcoin was around 7,500 at the time, and it went pretty close to 20,000, and everyone was like, you got the people saying it was going to crash, but now, whereas it's come a little bit below 10,000 now, it's going to be a very interesting conversation. Is that one of the things you're looking to, or individual companies? Could you just give us a preview of what you're really looking for out? Because I know you're moderating, you're going to be crazy busy, but on the investment side, what are you looking to hear, or something that you're excited about?
I'm always looking for, when it comes from a mining or an oil gas side, it has to be an asset that has the potential to move the needle. Like a Pebble type of deposit from Northern Dynasty, or you look at some of the assets coming out of Serbia with Nevsun. It's got to be big, high grade, world class. And then I look at the management team, and is there a chance for a disruption? Like, what is the next disruptor? I invest a lot of money in my analysis and my analysts finding, what technologies, because they're really coming in the mining sector and the oil and gas patch about what type of technologies are coming in to really disrupt and crack the code to reduce costs. So that from the resource side. From the marijuana side, look, the world's largest marijuana company is called Canopy Growth. A very close friend of mine, a guy named Pat DiCapo, was the founder of that company. And in 2013, I was one of the largest shareholders of it because Pat was my buddy. He invited me to the meeting in the room. I liked the story, so I put a lot of money into it. And look, I did not ride it all the way to $48. Our original cost base was 1/100th of that. It was still almost a 10-bagger for me, but you got to move your capital and to other aspects, and that's where I came up with my big money for Northern Dynasty when I became one of the largest shareholders there. So you got to look at sector rotation and mitigating your risk. When it comes for the crypto miners specifically, I always remind people in the gold sector we have something called all-in sustaining capital or all-in costs, including not just cash costs. And people have to really understand that the biggest cost in this crypto world, crypto mining, is your power costs. So what is your all-in power cost? Not just your rate, but your delivery charge, your surcharge, your minimum charge, your power charge, your taxes, your connection fees. You have to include all your power rates. So be careful when companies advertise that, hey, we're at like 5 cents per kilowatt hour. That's a good rate. However, when you add up all your other costs, is it 5 cents all in, or is it now 6.5, which is drastically different than 4.9? So you really got to get into the details and be very careful. And for a retail person, ask simple questions. We have a guide we put together, the 50 questions for the retail audience to ask while they're at the show. It's on our website. What's the management's average cost base? Are they hard dollars or are they soft comp, meaning that they just get free options and they actually don't have anything at risk and they got a job, so they don't really give a shit? Whereas if I'm putting up hard money, I want to make sure that the management team are at more risk than I am. And that there's little tricks to the game to figure this out very quickly, rather than jumping into and doing this massive due diligence and then you realize, wait a second, there's massive debt on this company. You got to be able to juggle a quick filter, Frank, to go, okay, on the first pass, this makes a lot of sense. Let me dig deeper, because you only have so much time in a day, and you want to be as effective as possible in analyzing. Another little trick you want to do when you're at a show that, basically 5 years ago I came up with this and I got credit for it in the industry, is a lot of analysts just start ripping through a 400-page feasibility study and they spend a week on it. I'm so busy doing so many things. I have a different theory. I've got a database of all of the main companies and all of the main authors of all of the different sectors, whether it's geology, engineering, blah, blah, blah. And what I do is first is if there's a company that I'm really interested in and they come up with a feasibility study, the first thing I look at, Frank, is who are the signing officers in that report on the geology, on the engineering, on the hydrology, on the metallurgy, on all the different aspects. And then I look back quickly onto their last 5 stories that they signed off on. And if these guys have a pattern of absolute failure, you know what? I'm now going to look at that report in a totally different view, just because it has the stamp of a big company like SRK or Hatch or whoever the engineering firm that is, the JDS or any of these big firms that people use for these feasibility studies. It comes down to the people, and that also means on the analysis report. So many times, even when I was at my old firm, they were like, oh, this looks great. And I'm like, yeah, that's fucking stupid, because this geologist's reports are overly optimistic, and look at his last 5 reports with these other companies, and they were all a disaster when they went into the underground. And if this is a geologist that is specialty on, let's say, gold open pit, now he's doing underground, you got to take this with a grain of salt. So there's those little tricks to kind of do first pass filters, if that makes sense.
No, it definitely makes sense. And you can see as a whole, it's just the whole research process and the more you put into it, right? I mean, even when it comes to me and having great contacts in the industry, where there's people that know a lot more than me in certain areas of the market, especially biotech, where I'm able to call doctors, I'm able to call like some of the people connected in the industry and stuff. But in the end, we're all looking to just get the most information and best information so we can figure out if we can invest in it, if we're going to be right and what's going on. And that's going to lead to the last thing here, because what we do all the time when it comes to boots on the ground. A lot of times we plan trips around this Vancouver thing, which we're going to see. And yeah, I could say it's a cryptocurrency company. I won't say the name of it, but we're taking a 6-hour drive to go see it with you and a couple of your crew, which is going to be a great, a great trip. So I had a question for you because I'm down $100, which I paid you last time we took a trip like this. I think to Boeing because we were playing cards. So what are we playing on the way there? Because I need to make my money back. And I know there's going to be a big card game going. So what's it going to be, pal? Because you're not taking my money this time. There's no way.
I'll let you pick any game you want when it comes to numbers or cards. How about that?
Yeah, I think I might have to go with Texas Hold'em. We'll see. But yeah, the 6-hour drive could get expensive, so we'll see. But
or we could just go to the next, or Frank, we could just go to the next Stansberry conference and take their money and then poker tournament.
Yeah, I know. We used to go to Stansberry conference all the time, and you and I used to do very well in our poker tournaments that we played there. So, but Marin, listen, thanks so much for coming on, guys. If
I say that with respect. I don't want your audience thinking that there's any hard ill. Like the Stansberry guys are my buddies, but I love busting their chops. That every time we go, we take their money.
Yeah, no, it's all competitive, and they have that. Yeah, it's awesome. So, guys, look, Marin, I really appreciate you coming on. And for listeners out there. The conference is absolutely for free, thanks to Marin, and there's a banner on my site if you want to click it. Guys, if you're going to be in the area, go. If not, don't worry about it. But the fact that it's free and you could walk in for free and talk to Rick Rule for free and talk to so many, Frank Holmes and Marin Katusas and stuff like that, it is an incredible opportunity in Vancouver if you can get out there or if you're in the area. So definitely check it out. And Marin, I know how busy you are because you're setting this whole entire thing up. It's a couple days away. So thanks so much for taking the time to come on the podcast, but I really appreciate it.
You bet, and I look forward to having a drink with you when you're in town, buddy.
All right, man. I'll see you soon.
All right. Thanks, man.
Hey guys, as always, great stuff from Marin Katusa. I mean, I love the first mover advantage. I want to explain why, because a lot of times we talk about things and maybe you're invested in gold stocks or you're not familiar with the industry, right? We don't. So I love that, he dialed it down and gave explanations of why there's a first mover advantage in that. You're seeing those names move higher. And usually when you see that, it filters down to the producers and then the junior miners. So maybe it's a good time to buy the producers, right? Because we haven't really seen major moves in those stocks yet, even though gold prices are higher. The boots on the ground. You can see why it's so important. I mean, this led to some of the best picks that we've had. I mean, especially Terra, which he was talking about, Northern Dynasty and stuff. These are things that we've mentioned on the podcast. And like you said, you're going to have losers, of course. But when you have massive winners like that, that's what we do the research for. That's what we do. And that 6-hour trip that we're taking into Washington to go see one of these companies should be very interesting. It's a company that I want to get a better perspective on. It's a real crypto company where you see mutual funds invest in it. From what I'm hearing. So it's pretty exciting, at least I don't know if they're investing it, but there's a lot of interest in it. And because these guys did the right thing, most of the people that I talk to in the crypto industry is very interesting. Geeky in a good way, data mining guys, but know nothing really about the finance part. And they try to come out with these white papers and ICOs. And when I hear some of these, and I've been on 3 or 4 of these calls now, and I mean, it's kind of a joke, the amount of money they want to raise when some of them don't even have a website. Some don't even have the business. We're going to take over. We're going to do this with the company. And, you're asking for $30 million and you don't even have, the actual company built yet. There's nothing going on. So, seeing this and going there with these guys did the right thing where they have a great data mining company and they went to the right people to finance this thing. So it's going to be exciting to see this facility. I don't know if it's an investment opportunity or not. We'll see. I'll come back and let you guys know, but it's going to be a lot of fun. But as you can see, you get a lot of great stuff from Marin there, and hopefully you guys enjoy it. But let me know what you thought of the interview at frank@CurzioResearch.com. That's frank@CurzioResearch.com. And real quick, guys, once again, absolutely for free. Not promoting anything. If you want, there's a banner on our site for the Vancouver conference. Just click it, put your name in there, you get it free. If you want to go, go. If not, no worries. But we'll keep that banner up there until Saturday, or I think Saturday, and then we'll probably take it down. So that's on the Curzio Research. You can find it at www.CurzioResearch.com. Now, quick note. I just hired our next analyst, Curzio Research. You work for some of the largest hedge funds in the world, which I cannot name, but let me tell you, the biggest hedge funds in the world. Guys, just people of that are in the media all the time, some of the biggest hedge funds managers in the world. He's one of the best cryptocurrency analysts that I've seen, if not the best. And I know this firsthand because I flew him down to my office this week. And he blew me away. I mean, he was teaching me things that I had, we're still learning so much about the cryptocurrency industry. Yes, it's coming down, but it's creating a buying opportunity for a lot of things. People, there's probably 5% of ICOs that are coming out that are really worth taking a look at, that are great. And the rest are kind of like, I just want to try to make money as quick as I can. And man, I mean, this guy just blew my mind away. His name is Barry Cohen. You're going to see and hear a lot from Barry over the next month or so, since we're launching our first ever cryptocurrency newsletter, and the timing couldn't be better. This is exactly what I wanted to do. I love this pullback. I think this is a long-term trend. It's an amazing trend. It's going to include stock recommendations based on crypto, currency recommendations, and most important, you're going to have, I want to say first time, because I don't see anyone doing this, access to ICOs, which is Barry's specialty. And again, he's telling me he basically wouldn't touch more than 90% of them. He's been on calls with these guys. He's researched the industry, and it's unbelievable what these guys are raising money for. But there are a few that he likes, and it's very hard to get access to this market sometimes. Hiram Barry is going to give us access to ICOs, which is really, really cool. Again, it's a crazy market. It's nuts. But right now is a good time. You're going to see, cryptocurrencies are coming down. Why? Because you're looking at the regulatory front. And you're looking at regulation. Regulation is good, guys. Don't be a libertarian. Well, oh, my God, no government, whatever. I mean, those guys love that until there's no government and they get everything robbed and they're getting beat up in their house with no one protecting them. But in all seriousness, when you're looking at a government, and something that Barry's explained to me and I've talked to as well, because I had a great date with him, and this is, I believe, on Monday. Look, when the government's think of marijuana, when they tax these industries, right, they're going to start bringing in revenue. It makes it legit and makes the trend real. And that's what you want, because people want to invest in this. They want to be protected. I don't see these exchanges being completely shut down everywhere, but you need regulation in this industry, because if you lose your money, if you invest in Bitcoin, there's no one you could turn to get it back. You're done. There's no regulation. That's going to cause this to come down, but this trend is for real. And I look at it as the internet. It's a disruptive technology where all the major banks, all the major companies, so many of the Fortune 500 companies are investing in this, creating their own blockchain technologies. We're not talking about what Kodak is doing. We're not talking about what Long Island Tea Company or Mike Cigars are doing. I'm not talking about those companies, but real legit companies that can make money off of blockchain, because you're going to see a very volatile industry. But I see this as the internet, maybe 1998, 1999. You're going to get inflated. It's going to come down. But think about buying those stocks like Amazon's and a Netflix after that crash. And that's the opportunity. If you did that, you're going to be sitting on pretty much, you're sitting on a fortune today, right? If you bought those stocks, pretty much 2002, 3, 4, whatever. That's what we're looking at blockchain. I wanted to put the best analysts in front of you to tell you what's going on, not just someone I can grab that I can market the hell out of, but someone that knows what the hell they're talking about, because it's an important industry. It's a very risky industry, and you got to be very, it's speculative cash only, but you want to be really smart investing in it, because you could make an absolute fortune if you invest in the right areas and the right stocks and the right currencies in this market, and even the right ICOs. So Barry Cohen is going to be at the Vancouver conference, and so is Michael Alkin. So I have my whole team going there of analysts. Michael Alkin, also ex-hedge fund guys. These guys have worked for some of the largest hedge funds in the world. Again, they always tell me, don't name them, because that's the way the hedge fund industry is. It'd be great to say, hey, these guys work for this, this, and this. But if you talk to these guys, you're going to have access to these guys if you're at that conference. That's my team. These guys are awesome. I love these guys. They're brilliant. And they're going to be at the Vancouver conference. So if you're there, I'd love to introduce you to them. I know Michael Alkins is going to speak. I'm going to try to get Barry up there with myself to talk about ICOs, since I'm doing a speech on ICOs. I feel like I'm doing a disservice by not bringing him up, since he knows. I realized how much he really knows about this market, where my knowledge of this is great, but looking at 100 ICOs and what he's done in this industry and analyzing these things is incredible, where I think he's going to be able to teach everybody and highlight all the risks that people really don't know what's going on in this industry. They're going to crush you, and also highlight the winners or the potential winners in the ICO industry. So it's going to be really cool. Those guys are going to be speaking, representing Curzio Research. I'm very excited, and I just want to let you guys know. So let's get to my educational segment. So earnings season's here, right? All these companies report. So far, a lot of these companies have beat estimates. Most of the companies, and GE reported, going to send out an update. Stock's down a little bit. Again, another risky, just basically cleaning out the entire closet with this company and starting new. So hopefully, a couple more charges. The stock is down a little bit. But at this level where you're looking at, most of the analysts have target prices, even the ones that hate the stock the most, at 16, 17, 18. You see a little risk, but remember, GE's, it's not a short-term thing. Don't want to get too much into GE, because a lot of, that's a recommendation in my newsletter. I want to give my subscribers a lot of thoughts on that. But this is a stock that I think is going to be the best performer in the Dow this year and probably next year. But they are going to spin off a lot of divisions. It takes time. Spinoffs are great. You see incredible value. There's research even behind it. I've recommended spinoffs and done incredibly well, because now you're focusing just on one business instead of 10 like GE or tons of businesses. But it's amazing when you look under the hood now of how bad things were when Immelt was there and how he was saying we're going to have definitely $10, $12 billion in cash flow and $2 in earnings and stuff like that. And now that they're tearing apart business by business and going in, you're seeing it. And it's probably going to be like this for another quarter or two where you're going to see GE go up and maybe pop up to 20, and then you're going to see them report earnings. Oh, yeah, we forgot about this and that. And then, then you're going to hear about the spinoffs. It's a process. But at this level and how far the stock is down, I see a little risk from here. But you are going to see volatility over earnings and little things that come up. But they want transparency and say, hey, here's everything we have. This is our company, and this is what we're doing. That's what's going on right now. Couldn't a dividend from GE Capital, no longer, again, bigger charge than expected. And the stock's reflecting that right now. But most companies you're seeing out there are beating estimates. Now, they're reporting solid quarters, and they're raising guidance, a lot of them. Because the tax reforms, a lot of money coming into the company. What are they going to do with that? Maybe they buy back stock. Who knows? Hopefully, most of them don't buy back stock because they're trading at the highest valuations they trade at in probably 5 years. But you're looking at these companies and you're saying, wow, it's pretty cool. My original thesis on this was I think 2018 was going to be a rough year. That's what I said about 6 months ago and then even 3 months ago. And then when tax reforms passed, I realized when I'm looking at the estimates, a lot of these numbers are not reflected. The analysts needed to raise their estimates. So you're going to see a lot of companies beat this quarter because they're going to get adjustments. They're going to raise their guidance and stuff. And the analysts, right? I mean, again, tax reforms just happened. They're kind of late to the party to raise their estimates. Well, you know what? That's why I was like, well, the market's probably going to go up maybe for 3 months, possibly 6 months. But I may be wrong on that because the amount of investment firms that are raising estimates are incredible just this week alone. This is something that you guys don't see. This is like an inside thing that people don't talk about. You hear about upgrades and downgrades, right? Everybody does. You'll hear them on CNBC all the time. You don't hear when companies raise their earnings estimates or raise their price targets. Sometimes you do. Like if it's a price target with Amazon when you raise $1,600, it's going to be all over CNBC because that's entertaining and that's the highest on the market. Or if you see someone lower their target on GE to 12, that's going to be all over TV. But most of the time you don't see it. Right? You only see the upgrades and downgrades, but this is significant because when you put on CNBC and they say, JP Morgan is expected to report $2 in earnings and they report $2.05, say 205 in earnings, right? So they beat earnings expectations. That $2 in earnings is a consensus estimate of all the analysts that are covering the stock on the sell side, the Goldman Sachs, the JP Morgans. So when you look at that, if they beat that number, right, it looks good. Oh, they beat that number. That's great. The stock's going to go high. That's the way Wall Street works. Now, so my thoughts on this was those estimates are super low right now, especially since tax reforms passed. Now they're raising those estimates significantly. Let me give you an example here. Just over the past couple of days, I'm talking about Amazon, Netflix, NVIDIA, JP Morgan, Citi. I mean, Barclays came out, raised their target on JP Morgan. Wasn't that much, from 132 to 135. But Deutsche Bank raised their target on JP Morgan from $96 to $121. UBS raised their target on JP Morgan from 119 to 125. Amazon target raised to $1,600 from $1,200 at BMO. Amazon's target got raised to $1,450 from $1,330 at Oppenheimer. Trust also raised their target on Amazon, the target price to $1,400 from $1,270. Guys, that's just two examples. I'm seeing hundreds of these come out right now that people aren't talking about. What does this mean now? It means that the expectations are higher. It means that tax reforms are being priced into the market right now. It means, and I'm surprised that when you see Goldman Sachs blow out the numbers or you're seeing JP Morgan do well, that a lot of these companies have gone up, and we saw a major reversal on Tuesday. And now we see, look at what happened to Goldman Sachs, which is up after reporting earnings, and it got crushed today. I'm doing this podcast at 12. It got crushed just as I'm doing it, or in the AM. But keep in mind, guys, the biggest thing here is those expectations. And right now we have an inflated market, and the analysts are finally raising their estimates, right? So all those estimates that you're going to see next quarter and the quarter after, because they're raising their estimates for next quarter, they're actually raising these target prices are 12-month target prices. So now these target prices, when you raise your target price, it's all numbers. All right, it's all a model. That's all it is when it comes to research. If you're raising your targets because you change a number in your model, and now you see higher earnings, higher this, higher whatever it is. So when you get on these conference calls, I tell you, a lot of times these analysts, they're asking questions just based on their model. Okay, the inventory charge that you're taking, how much is it? Is it going to be several million this, that? And you're like, what are you talking about? That's for their model. So they're going to plug in a number, and once they plug in that number, all the rest of the numbers change, and then it comes out with a price target. I know, it sounds silly, but that's what they do, right? Just change one number in a model, and you're going to come up with a different price target. So as they're raising their price targets, they're raising their estimates, which means expectations for these stocks are higher. It's very, very, very important to understand that. Okay, it's not like, hey, I have nothing else to talk about. So, all right, let's just do this education segment. No, this is very important. So why is it so important? Well, when the expectations rise, right, what's going to happen when these companies, S&P 500, and all these companies report earnings next quarter? They have to meet those estimates, which are much, much higher because now the tax reforms are reflected in it. If they miss those estimates at this super high valuation, right, where we are in the market, right, 18, 19 times earnings, pretty close to that, more like 18. If they miss these earnings estimates, you're going to see 15, 20% drops in these stocks. And you know what? They're still going to be up 10, 20% over the past 12 months when this happens. Hey, that's what happened. But you're looking at a market where, hey, you know, it's going to be easy to beat earnings estimates. And again, when you beat that number, your stocks go higher. But now that those numbers are higher, it's going to be more difficult to beat them. And now you're bringing on extra risks into the marketplace, right? Because we do have risks. Yes, we see the economy is good. Holiday sales came in strong. Going to see those retailers report. They're probably going to report great numbers. But those stocks have run up a lot. If you listen to me, you should be up on almost any single retail that you bought, especially department stores. You should be doing very well in department stores. Something I was on 3 months ago when they got destroyed because the mall's dead. It's dead. You just can't get a space for 2 miles, and you know you got to wait online for 2 hours. But it's dead. It's dead. The mall. It's dead. I love that. But you're looking at a market over 2018, and there's a lot of risks. Aggressively raising rates this year 2 to 3 times. We're seeing minor inflation. Yes, it's picking up a little bit here. But you're taking that punch bowl away. You know, money no longer cheap where, you know, companies aren't going to borrow money to buy back stock. You have companies, think of companies in debt like Tesla, Netflix that always need to raise cash constantly. And it's going to cost more for them to borrow money in the future. We're seeing major disconnects in the high yield market where 43% of U.S. high yield bonds trades inside 2.5% to treasuries, right? So that's a spread. To put that in perspective, okay, only 13% of U.S. high yield bonds traded inside of that, right? So it's a 250 basis point, right? 2.5% spread. And that's 12 months ago. This is the largest percentage of high yield bonds trading within that range, within that spread, since June 2007. If I pull a chart up on this, and maybe I'll post this on Facebook, Curzio Research Facebook page, it would scare the hell out of you. Because you're seeing everything fine except for 2007 and except for now. So what happened at June 2007? It was basically, you know, that's when the market, you know, the credit crisis started before that. But that's when you started seeing those cracks come out in the foundations, taking charges. You know, it was IndyMac and all that stuff. That was like in 2007, mid-2007. I'm not saying there's a credit crisis coming, but you're seeing cracks in this foundation where we're at super high levels. And there's a lot of risk in the market. A lot of risk in the marketplace. So you don't want to look at its valuation as a reason to sell, which, you know, again, you don't want to sell solely based on valuation because, you know, you get momentum names. If you did, you never own Tesla, you never own Netflix, you never own Apple. I mean, Apple was like 70 times earnings in 2004. I mean, you'd be up probably 2,000% on that stock for the past 12, 13 years. But you would have missed it because, wow, it's trade. Look where it's trade. I can't buy it. So it's not valuation. But when you have valuation coupled with a lot of risks in the marketplace, and you have geopolitical risks out there, U.S.-China tensions, North Korea, Syria and Iraq, then you throw in, you know, Bitcoin coming down, right? A lot of speculators getting to the market, more money coming in, like everybody's spending more. When you see something like Bitcoin crash, that's going to hurt a lot of the smaller individual investors. And that's down 50% from its highs now. But there's a lot of risks in the marketplace that you have to be aware of. And the fact that these estimates are being raised, guys, means that the expectations are built in. It's going to be very, very scary. And it's not going to be that easy for these companies to meet their earnings estimates going forward. Remember that I said that. So what do you want to do? Just be careful. I don't have a crystal ball. I could be wrong. The market can go up for another 15 years. I have no idea. What I want to do is try to have you guys make as much money as possible by taking on a little risk, right? That's the goal as investment managers. That's what we want to do, okay? And to do that, be careful. You're probably up a lot, probably doing well over the past few years. Take some profits. Take a little bit off the table. Don't get too greedy here. I mean, I've seen so many people make so much money in stocks and lose the whole entire thing, and they still own it. I've seen people in mining companies where the stock was 10, 12, and they've owned every share, and this was like in 2005, 6, and they still own every share, and the stock is 40 cents. You got to take some off the table. Not every stock goes up forever and ever and ever. Not every stock is like Amazon or Netflix or Facebook. So follow your stops and be careful. We're in the biggest bull market in history that's going on since 2010, and we're all pretty smart. We all know that markets don't ever go straight up forever. So be careful. Follow your stops. Take some profits and winners. Keep some powder dry, guys. Bear markets are good for people who are prepared because you get to pounce on a lot of those great names that you missed on the way up that could be down 20, 25% later on. So make sure you have some money. You guys earned it. You did very, very well on a lot of stock picks. You guys are probably up a lot over the past few years. So when this market does turn, and it will, it's not if, it's when, it will, you're going to be a happy guy. You're going to be able to buy a lot of these stocks on the way down and a lot of great names, maybe at a 20, 25% discount. But we are seeing those cracks in the foundation, especially during earnings season. And now that all these estimates are raised and expectations are sky high, there's no room for error. So if your company's going into earnings season and they miss, you're going to see a 15, 20% collapse, even in some of the biggest names, even in those consumer staples you own, even in safe haven places. So just be very, very careful in the market. That's what I'm seeing right now. Hey guys, don't forget to check out my Curzio Research Facebook page where I'm posting live videos, CES, great stuff. I'm getting a ton of view in these, which is awesome. Again, I like doing these live videos, just telling you what I'm thinking, what I'm doing. I'm posting those all the time. And since I'm in the field a lot, right? So you're going to be at the Vancouver conference. I'm going to do some live videos there as well. Try to show Marin Katusa when I grab him, and maybe at night we go to dinner and grabbing a drink and stuff, and just hanging out, because that's where the best ideas come from, right? I mean, I could just do a live video presentation and show you a video of Marin and all those guys up on stage, which is cool. And I'm glad Marin's going to provide those videos for you, for free. But more important is when we go to dinner, when we're hanging out discussing ideas, that's where you find the best ideas. And it's really cool. I'd love to get you a part of that situation if I'm hanging out with Amir or whatever, or hanging out with my analyst, if it's Barry or Michael Alkin, and we're just having a drink and hanging out. I'd love to get that take on it and just go around a table, what you saw today and what's cool. And it's a lot of hard work. We'll sit down, have a beer, and hang out and grab something to eat. But that's where you find the best ideas. So I want to give you guys that inside perspective. You can get that by going for free. I try to provide as much free resources as possible for you guys, and that's all for free on the Curzio Research Facebook page. So busy week, busy month coming up. And thanks so much for listening. Appreciate all your support. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.